Welcome back, everyone. It has been a little while since I posted an update video, and that's because there's been quite a bit of movement in the market and not a lot of movement across my accounts. Thanks for joining me again. Invest the Rest, my new YouTube channel that covers three different investment portfolios with three distinct strategies, one focused on growth, one focused on high yield dividend ETFs, and one focused on selling put and call contracts in the options arena. So, all started with $10,000 at the beginning of 2025, specifically January 2nd, 2025, and we're comparing the progress and returns and performance of all three accounts against each other, and then obviously overall. Now, before I get into the details here, we are going to go over all three accounts today. I'm combining all three accounts like I did in my last couple of videos in a single video because there hasn't been too much movement in these accounts. Now, also, if you've watched my previous videos, you know that this is not financial advice. I am not a financial advisor, and these videos are for entertainment purposes only, really a depiction of my own financial journey. So what I have on the screen here is the $10,000 growth account. Not a lot has changed. I think on the last video, this account was down, 4 or 5%, minus 4 or 5% in the red. You can see that those losses have continued to extend to about minus 7.13%. Our one front runner, if you will, is still hanging on to that green in the positive mark by $1.18 FDLO, Fidelity Low Volatility Factor ETF. So that is our one fund that you could say is still in the positive, and with everything else in the negative, as far as bad as I should say, 12.8%. We have quite a few funds, a couple of iShares, Vanguard 500, Vanguard Growth down near around 10% in the negative. And then many of the funds, some more John Hancock, Invesco, S&P 500, right near that 4, 5, 6% loss. So altogether, right, 7.13% loss, $706.58. And I'm really just watching this account to see what it does in a bear market, right? Right now we're in a correction, maybe pre-recession, whatever people are calling it. Everyone has their own terms right now. At the end of the day, my opinion, nobody knows what the market is going to do in the future. Everyone has a good idea. People have their own opinions. Some people are better at predicting it than others. But at the end of the day, no one can tell any of us with 100% certainty what the market is going to do. Obviously, political influence has a big role on market shifts. I think the politics that we've seen recently have had most of that influence on the market. I think that'll simmer out. I'm interested to see what this fund does in the future. And really, this is my invest it, put the money in, let it sit, and watch to see what it does, right? I have a large variety. I am very diversified, in my opinion, across multiple different funds in this account. And so to see that everything is in the red indicates to me that it's time to just sit back, wait and see what this fund does, and hopefully as the market does correct, hopefully towards the upside, we'll see some of this red go away and turn into green. So as it sits right now, $700 loss on that $10,000 initial investment. Not terrible, not to the point where I'm going to start selling everything. We're going to wait and see if some of this negative market action is going to turn around for the positive. So that's the growth account. Let's get into the $10,000 dividend account. Some new updates on this account and specifically new dividend announcements, right? So as you can see, we'll go over the account highlights, right? $2,401 capital loss. Now, $10,000 invested in the dividend account, $10,000 invested in the growth account. The growth account is low to medium volatility, low to medium risk, right? So on a down market, the exposure is a little bit less. And that's being shown, that's what I've said from the beginning. That was the goal of my strategies was the growth account was going to perform better in a down market than the high dividend ETF account. And that's shown right here, right? Just looking at capital loss across all of my funds, we are down $2,401 on that initial $10,000 investment. Now, we add the dividends in. That's a major point of this account. We've earned $1,319 in dividends year to date. And so total loss, calculating the capital loss and the dividends earned, we're down about 10.8 or rounding up to 11% in the red. Now, unlike the growth account where everything is down, we do have some funds here, SMCY and PLTY, that are 8% on average in the positive. But we also have MAXI or MAXI and CONI and also SQY that are 20 plus percent, all the way up to almost 27% in the red for total return. That means on SQY specifically, I've lost 27% of the money invested. I've invested around $1,077. You guys can do the math. And so far, despite the dividends that we've earned, the capital loss, we've lost about 27% or $270 roughly. So there's more extremes in this account, right? More peaks, more valleys. The reds are redder and the greens are greener, if you will, okay? And that comes down to SMCY and PLTY down here paying massive dividends in January, February. We saw some, I think, PLTY, if I scroll down to February, did pay that massive $6 dividend towards the end of the month. And because of that, even though we only own 15 shares, we got a very good payment from PLTY, which, despite the capital losses in this down market, has kept this fund in the green. Now, yes, it would have been great had I had a crystal ball and I only invested in SMCY and PLTY in this bear market. I would be the one person that, had all the answers, and I'm up 8%. But that's not the case. I have to diversify to get those winners, and I also have to take on the losers. But the goal and the strategies designed for these portfolios is that over time, hopefully it averages out to the positive. So once again, growth account, we're down 7%. Dividend account, we're down about 11%. That's because this is higher risk, as I said. Total invested, because I am reinvesting the dividends every month, $10,958. If you go back and you take a look at my previous video, I cover how I expanded this account, right? I bought additional shares across 5 of these funds. I didn't buy any new funds, okay? I kept my expansion after February to existing funds. If you remember the expansion after January, I added QDTE. But at the end of February, because of what the market was doing, I decided to take the opportunity to lower my cost basis across 5 different funds, reinvest February's dividends into funds I already own to get that average cost basis down. So $10,958 has been invested. Obviously, 10,000 plus 1,300, you're like, hey, where's that extra money, right? It should be 11,319 invested. Well, because I don't reinvest until after the month is complete, right? I don't feel it necessary to reinvest as soon as I get the dividends. And right now, for my strategy, I'm waiting for month's end, collect all the dividends for that month, and then decide at that point how I'm going to reinvest that money. So somewhere along the lines of $550, $600 every single month will be reinvested into this portfolio. So if I scroll down here, we can take a look at March, right? So we had 5 funds that announced their dividends and paid most recently last Friday, 3/14. So these funds announced last Wednesday, they paid last Friday, and this money is now in my account. So MSTY announced a $1.37 per share dividend, $1.37. We have 45 shares, and that's up from February's total shares of 40. MSTY is one of the funds that I decided to buy more shares of, and that paid us $62 in dividends. SQY, right, if you remember from up here on the table, the one that is performing the worst, kind of kept that trend going with only a 50-cent dividend payment per share. I do have 60 shares because, once again, comparing this to February, I decided to lower my average cost basis and expand that position by 5 shares. But the dividend payment for SQY decreased another 8 cents from February. So February SQY paid 58 cents. If we go up here in January, it paid 63 cents. So slow decline on SQY. And, you know, like I said, it's tough for these funds based on their investment strategy to make money in a bear market. So this performance, in my opinion, is to be expected. You lose on the capital side in a bear market, and you also lose on the size of the dividend payment in a bear market for these funds. So, in all of these funds, very many of these funds all have a very similar strategy. So, their performance in a bear and a bull market will be very similar. You know, they all have their nuances, but in general, in a bear market, they're going to be highly exposed to the downside of their positions. AMZY also, again, announced a 42 cents rounding up per share dividend payment. We own 55 shares. This is not a position that I expanded at the beginning of March and resulted in a $22.97 payment. SQY's total, I don't believe I said this, but $30.08 added to the account. SMCY, fairly respectable dividend payment announcement considering the state of the market. $1.97 per share. I have 40 shares of SMCY. SMCY, again, the third announcement from last week where I expanded the position. SMCY, looking in February, I only own 35 shares. I own 40 now. Okay. Again, though, February, $2.09 per share. Down here, about a 12-cent decline, which is really good in my opinion for SMCY considering the market trends, but still a decline in monthly dividend payment. If we go up here to January and we take a look at SMCY, $1.72. So the fact that SMCY was able to increase its dividend payment in the month of March is very impressive to me. Scrolling back up to the main table, that's most likely why SMCY is one of the only two funds that is in the green and in the green by quite a bit. Lastly, the last announcement from last week, QDTE. This is our weekly paying dividend. They announce a dividend payment every single week. I own 15 shares. I own 13 in February. I expanded the QDTE position by 2 shares in March just to make it an easy round. I like to invest in lots of 5 shares. I don't know why. It's just the numbers are a little bit easier for me, and it keeps it a little bit more, in my mind, it's a little simpler. But other than that, really no rhyme or reason for it. But I did have the money available, so I bought 2 more shares of QDTE. I own 15 shares. They announced a 23-cent per share payment, which is $3.50. Now, remember, they pay weekly. So 4 weeks in a month times 25 cents on average is somewhere between 80 cents and $1 per share per month, which is pretty good considering AMZY only pays monthly and they announced a 41-cent payment for the entire month. Between the 2 QDTE payments that we've seen so far in March, 23 cents and 15 cents, QDTE is almost already beating AMZY or SQY, and it has 2 more announcements, one on 3/19 and one on 3/26. So QDTE, even though it pays weekly and those total amounts are less, is a very respectable fund as far as consistency in dividend payments. Like I said, somewhere between 15 cents and 25 cents per share is what I expect on any given week from QDTE. And from my experience with the fund over the last year or so, they've seen that they've been very consistent with those payments. Now, looking ahead to this week, actually tomorrow, right? 3/19, we have three more funds: GUI, GOOY, YBIT, YBIT, and another payment from QDTE will all announce tomorrow on 3/19. So I will put out another video tomorrow capturing those payments. Will probably be hopefully up near $300 total for March, which leaves us a good chance at getting to that, at least that $500 mark for March of 2025. February was 540 total dividends paid. January 533. Very close, very consistent. I'd like to see that consistency in March as well. And if I can see that consistency in the current market conditions, which in my opinion for this strategy are extremely unfavorable, I think the performance of this account in a good market or in a favorable market, the sky's the limit, right? And so I'm waiting for the market to turn around. I just started this account at the beginning of 2025, and 2 months in, the market took a turn for the worse. So be it, right? We're in the red, but I think this strategy, if you look at some of the trends that I'm seeing so far throughout this account, throughout the payments, throughout the monthly totals, I think the strategy has the promise to work. We just need favorable market conditions, right? Most strategies in unfavorable conditions, especially when the market takes a sharp turn for the red, are going to show red. There's very few strategies that are going to be able to entirely withstand that decline. And so even though this is deteriorating, I'll say, more than the growth account, right? We're down almost 11%. It's only 4% more than the growth account if I come back here, which is down 7%. So the fact that there's high volatility, high risk in this account, and a good chance for high payouts in a favorable market, only being down an additional 4% to me is pretty good considering how risky some of these high dividend payments can be. So I'm very pleased with the performance in a bear market, and I'm very excited to see how this fund will perform in a bull market. So that's the $10,000 dividend account. I'm going to switch over to the options account. And if you've been following the options account, not a lot of movement. We got assigned some MSTU in week 3. We got a major bunch of assignments, grouping of assignments here in week 6 and week 7. And the market continued to decline. And because of that decline in the market, my average cost basis is very high compared to the current price of the stock. So week 9, I was able to watch my previous video because I go over buying these funds, okay? Or I say buying, opening. I sell calls and I sell puts, right? Check out my other option account videos to get a little bit more insight into selling call and selling put options. I go over it in quite a bit of detail. But in week 9, I did open a call contract, 2 call contracts on MSTU for a strike price of $8.50. Why a strike price of $8.50? Again, because I own 200 shares of MSTU at a strike price of $8.50. I sold put contracts in week 7. I got assigned those shares at $8.50 a share. And so I turned around and I sold a call contract on MSTU for $8.50. Now I was able to open at a strike of $8.50, which was very fortunate in my opinion. I think MSTU, shown right here in column L, is down at $5.50. I was paid $80 or $40 per contract, right? Option call and put contracts are sold in bunches of 100. I sold 2 contracts for 200 shares, which gave me $40 in option premium per contract, $78.66 total premium collected after fees. And as of 3/14, which was the expiration date, MSTU was well below the $8.50 strike price. So what does that mean? I'm selling a call. That means I am selling a contract that requires me to sell all 200 of my shares at $8.50 if the buyer of my contract so chooses to initiate that right. Well, of course, they're not going to do that because at a market price of $5.50, they're going to buy 200 shares on the open market at $5.50. Why would they buy it from me for $3 more? Right? So they paid me $80 for those two contracts. I get to keep that premium, and their contract expired worthless because they didn't initiate the terms of the contract before the expiration date or before the contract expired. The same thing happened for a put contract on MSTU. I was able to open that a day later, all the way down at a $6 strike price, right? Why did I buy at such a lower strike price? Because if I did get assigned, I'm trying to lower my average cost basis of all the shares that I own. I own 200 shares at $8.50. And then up here at week 3, if you've been following the account since week 3, MSTU, I own 100 shares at $11 and 100 shares at $12. So I opened a put contract on MSTU, $6 strike, thinking, well, if I do get assigned, at least it'll lower my cost basis. $6 will help quite a bit to lower the average price. I was awarded 47 cents per share, or $46.33 in premium overall after fees for that single put contract. Again, with a expiration date of March 14th, which was last Friday. So, fortunate for me. Now, column L shows the current price, right? Not the price of last Friday, but the current price of MSTU. On Friday, MSTU made its way, because Friday was a decent day for stocks overall, made its way above $6, which I was fairly surprised at. Okay, I think it got up to like $6.08. Okay, so this put contract expired worthless. I was kind of shocked about it. Obviously at $6.08, not a lot of margin there. But again, why would somebody sell me 100 shares at $6 if they can sell it on the market for $6.08, right? Not a lot of money there, but at the end of the day, it is still more money, and the buyer of this contract, it wouldn't make sense for them to initiate that contract. So they paid me $47 for the contract. I retained $46.33 after fees. And because MSTU was able to just barely scrape its way above $6 at close of market on Friday, this contract, the buyer didn't initiate the terms, and it expired worthless. So good result there. We didn't get assigned, freed a little bit more money up in the account. However, unfortunately, all last week, I could not open anything, right? I was looking to open calls on NVDX because I got assigned some shares in week 7. MSTY, the same. MSTU, I couldn't open anything. It didn't make sense to open puts. It didn't make sense to open calls. The market was kind of in the toilet, and I just couldn't justify for the premiums that were being offered to open any of these positions based on the risk and the exposure that I felt came along with them. So no action in week 10, which after trading options for about 2 years now, I don't think I've ever had a week where I wasn't able to have some movement, whether it's in a specific strategy or in my general account overall. I've always been able to make some moves with my option trading. And week 10 was the first time I went an entire week without seeing any opportunity, which is okay. Sometimes sitting and waiting, in my opinion, isn't the worst thing. Week 11, yesterday, 3/17. I was able, however, to open a put contract, sell a put contract on, again, MSTU. And why MSTU? Because MSTU is still the most volatile out of NVDX, MSTY. I've seen the most movement, and I've seen the most premium being offered, and that's why it's attractive to me currently. So again, strike price, $5.50. I was able to get it even lower than that $6 mark from week 9. So my strike for this put contract is $5.50. It expires this Friday, 3/21, and again, I was awarded 40 cents per share, or $40 overall, $39.33 after fees. So again, a contract, right? Selling a put, I'm saying I'll buy at $5.50 between now and 3/21, or between now and this Friday, if the price drops below $5.50. As you can see, it closed today. It is right at $5.50. So hopefully it's able to climb a little bit between now and Friday. We have 3 more trading days this week, and this one will also expire worthless. We won't have to take any action, and we'll retain that $39.33. All right, that was a little long-winded, but it's been a while since I did an update video. Again, there hasn't been a lot of movement, but there's a fair amount even still to cover. So where are we at this month? Well, we don't have a lot of trades. You can see week 8, one trade, week 9, 2 trades, week 10, no trades, and then week 11, 1 trade. Compared to the weeks prior, I don't think we had a week that was less than 4 trades, many going above 5 trades, at least for the first 4 weeks of the year. Week 5, week 6, we were still able to get 3 trades in. Week 7, 5 trades. And so, we're seeing that sluggish downturn in the market, which isn't conducive for my option trading strategy. However, $302.07 in March. Well, you might say, well, where did that come from? Because all the March values in column I only add up to $164.32. So where did the rest of that $302 come from? Well, what I want to draw your attention to is this assignment right here. MSTY, we were assigned 100 shares. We had to buy those shares at $26 a share back in week 6. I haven't been able to open a call contract at a $26 strike. MSTU is currently at $20.22, and honestly, it's been quite a bit lower, $18, $19 in previous weeks. So I've been holding those MSTY shares until I get the opportunity to open a call contract on MSTY at the $26 strike. Well, I had to hold those shares for so long, I was awarded the dividend payment for MSTY, right? If I go back to the dividend payment, or the dividend account page, and I scroll down here to the March table, MSTY announced a $1.37 payment per share on 3/12, and they paid this past Friday on 3/14. So what I added to this sheet, if I scroll over here, in the off chance that I have to hold a dividend paying fund through the dividend payment date, I've created this table where I will track dividend income. I think it's entirely fair. It's a little bit outside of the strategy of this account, but it is money that is entering this account, and it is income that I receive as a result of or I'm being rewarded for the risk of having to hold MSTY because I can't open a call contract. And so I think it's right within lines with the strategy, right? I want to open at a $26 strike for a call. If I can't do that, I hold them until I can, or I continue to lower my average cost basis until I can open a call at that average cost. But until I can do that, based on the funds available in my account, I have to hold these MSTY shares, and if I hold them long enough, I will get that dividend. So I have 100 shares, $1.37 per share, which equals $137.75. So I add that amount to the March total, plus the premium, 164 plus 137, gives you right around $302.07. So scrolling over to the retirement table here, this is the main motivation, right? This is how I'm going to retire. This is the snowball effect. We started with $10,000, and by the end of year 5, we're hoping to get to $410,000, earning 6.5% on average per month. So we're up to $302.07 for March. Gives us a 2.64% ROI for March. Obviously not ideal. I'm hoping to get to at least 3. We're getting towards the end of the month here, but it's quite a bit better with that dividend payment than it would be for option trading alone. So we're at 2.64. February was 6.18. January, massive, 7.59. On average right now, we're at 5.47%. So we're only 1% away from our average ROI through the first 3 months of 2025. I'd like to get to 11,700, I'm at $11,726 total, right, for this account. I need to get up to that $12,079 to start April on track, right, to meet my goal for the starting balance of April. We may get there, we may not. Hopefully, if we don't, I can recover in April and get to that 12,864 mark for the beginning of May. Again, month to month, it's motivation, it's a goal, but if I don't reach that 6.5% in March and it ends up being 3 or 4% ROI, that is okay. Some months will be low and some months will be really high, like January. That's why I started tracking the average percent return for the account overall, because that is the number that is my ultimate goal to reach that $410,000 by the end of year 5. Now, if we have 2 or 3, maybe even 4 low months in a row, that will affect the final result down here at the end of year 5, because we're talking about 6.5% reinvested every month, right? And if we're only reinvesting 3% every month, it's starting to chip away at that snowball effect. But I'm hoping the bad months are sporadic and frequent, and we can recover quickly and get that average back up to that 6.5% or higher. So that is the final account, the third account, the $10,000 option trading account. We've earned $1,588 in premium, plus that $137.75 in dividends, giving us a total of $1,726 in income earned, bringing the account total value up to $11,726. We currently still have a total assignment of shares of 10,700 and a total exposure of $550, which is that one put contract I opened yesterday. Total account assignment and exposure, $11,250, which is about $500 under our account balance, which is really the limit for this account. Unless MSTU drops to around $450, I might be able to open another put contract this week. But I only have about $500, slightly less even, to play with. And so we're really tapped out. We got to wait to see what the market does, and then hopefully open some calls later this week for next week. That's the goal anyway. So lastly, let's take a look at the summary, as I like to always do. We have, and this is the wrong color here because we have finally entered the red. All 3 accounts together for the first time in 2025 has been negative. Actually, that's not entirely true. We did dip negative, I think, on one of the previous videos, if you have been following along. But the option account has been keeping the other 2 afloat. But because of this week, more consistently, we're in that red area. Not by much, $62. I think in the previous video is a little bit more, is $100, $200 in the red. But I'm starting to see a more consistent trend. And so for right now, we're going to mark that as red. So the dividend account overall, $1,000 in the hole. Option account is positive, $1,726. And I don't track capital loss for this account. I covered the reason why in my previous video, so check that out. And then the growth account, $706.58 of loss. So $30,000 invested in total, right now down $62. So $30,000 invested through very unfavorable market conditions. We're $62 in the hole, really not too bad. And I really think it's going to start to improve if this market can start to turn around and have a good couple of weeks as we move into summer here. So I appreciate everybody listening to my video, everybody watching. Let me know down in the comments, do you like the longer format videos with covering all 3 accounts. I have been adding chapters so that if you're only interested in one account, you can skip ahead to that content. But I have been doing all 3 accounts in the same video. It'll result in fewer videos per week, but it kind of puts all the information in the same place. Or do you like the many videos per week, updating different accounts by themselves, but updating them more in real time, right? So like tomorrow, when a new dividend is announced, new dividend payments are announced for the dividend account, I'll do a video just for the dividend portfolio, but that'll be much closer to the real-time information, right? They'll be announced tomorrow morning. I'll get that video out tomorrow afternoon, and you won't have to wait for this overall video maybe later in the week or this weekend. So let me know what you like more. If you like more the more amount of videos with a little bit more relevant information as far as when it happened in the market, or do you like the longer format videos where I combine all the information and put it in one place? Or do you like both? Let me know that too. Maybe I can keep doing both if that's what you guys enjoy. Thank you so much for watching. I appreciate everybody's support. Throw me a like. Make sure you subscribe. You'll get notifications of new videos that come out. And as always, everybody, thank you so much for watching. I'll catch you on the next one.